You've probably come across this if you've been trading for more than a year. Sometimes, the price moves in the opposite direction of what you expect, hits your stop loss, and then quickly goes back to where it started. This is called a stop hunt. Stop hunt is when experienced traders find a way to get better prices for their trades. They'll make it seem like the market is going one way, trick you into selling, and then take advantage of your position. This can happen to you repeatedly until you understand how the big players in the Forex market think. It's a common experience for regular traders to feel confused and frustrated, wondering, what just happened? Why did I get stopped out? I've been through it too, but once I learned about smart money concepts, my stop losses were no longer taken advantage of carelessly. In this amazing video, we'll reveal an advanced smart money trading strategy that will leave you amazed. We call it order block inception, so let's jump right in and understand what SMC means. Smart money trading refers to institutional trading strategies that align with the smart money players' perspectives. Institutional smart money trading is more powerful and accurate than retail trading strategies. But that doesn't mean retail strategies don't work at all. It just means that institutional Forex is even better. Before we get into this strategy, it's important to grasp some smart money concepts like order blocks, break of structure, and change of character. Let's start with order blocks. Order blocks are areas where demand and supply are optimized. They form when a lot of money enters the market, causing a big movement. In simpler terms, it happens when there's an imbalance between buyers and sellers. To identify order blocks in a bullish scenario, we look for the last bearish candlestick before a strong upward move. This candlestick marks the order block zone, or the first bullish candlestick indicating the big move. The same idea applies in a bearish scenario. Now, let's talk about break of structure and change of character. Imagine a market that's trending with a pattern of higher highs and higher lows. Each of these highs and lows represents a level of market structure, though we focus on the most recent ones. When the market breaks the latest higher high to the upside, it means it intends to keep going out, and we call it a break of structure. On the other hand, if the market breaks the recent higher low to the downside, it suggests a change in direction, and we refer to it as a change of character. It's important to note that a break of structure is valid even if there is a shadow that goes above the previous structure level. However, for a change of character, we need a candlestick to break and close below the previous market structure. Get ready to be amazed as we dive deeper into this incredible smart money trading strategy. Alright, now that we've talked about smart money concepts, let's explore one of its top strategies. For those new to trading, it can be a bit challenging to identify these levels, but don't worry, we'll use TradingView indicators to help us find these levels and determine the best entry points for both long and short trades using the smart money approach. This strategy can be applied to any time frame, not just the larger ones, so stay tuned for that. In this video, I'll be using the Euro-USD on the 4-hour time frame, but you can apply this strategy to any security you want to trade. First, go to the indicator search chat and look for Order Block Finder Experimental with a blue check by Welcome Low. Add it to your chart. Let's adjust the settings a bit. Right-click here and go to the Inputs tab. Uncheck the options as I'm doing right now. This tool helps us identify potential support and resistance areas on price charts. It's based on the idea that big institutional traders often leave order blocks or liquidity pools at certain price levels. The indicator marks these levels on the chart, making it easier for us to spot areas where price might reverse or consolidate. For long trades, we focus on bullish order block signals, and for short trades, we look for bearish order blocks. Now, let's move on to the second indicator. Search for Smart Money Concept and choose the one by Lux Algo. Adjust the indicator settings accordingly. This indicator provides real-time analysis of market structure and activity. It includes features related to smart money concepts, such as the break of structure labeled as boss and the change of character labeled as chalk. To take a long trade, we wait for a bullish change of character followed by a bullish break of structure. Once we spot these signals, we enter the trade. How do we know if it's a bullish change of character or a bullish break of structure? Look for both the dotted line and the text turning green, indicating a bullish market structure. When the line and text turn red, it shows a bearish market structure. Now, let's discuss taking a short trade. We enter a short trade when there's a bearish change of character, labeled as chalk, followed by a bearish break of structure, labeled as boss. Alright, let's break down the conditions for entering trades in simpler terms. To enter a long trade, we follow a few steps. First, we need to see a change in the market behavior that indicates a shift towards bullishness. We look for this change on the Smart Money Concepts indicator. Second, we search for a specific pattern called a bullish order block within that change. It helps us pinpoint potential entry points. And third, we wait for confirmation of an upward breakout, where the price breaks through a certain level. Once we have all these conditions met, we can enter a long trade. For the stop loss, we set a point below the lowest recent price level, which acts as a safety net in case the trade doesn't go as planned. And for the profit target, we aim for a gain 1.8, the amount we're risking in the trade. We let the trade play out and hope to reach our profit goal. Now, let's discuss entering a short trade. The process is similar. First, we look for a change in the market behavior that indicates a shift towards bearishness. We find this on the Smart Money Concepts indicator. Second, we search for a pattern called a bearish order block within that change, helping us identify potential entry points for short trades. And third, we wait for confirmation of a downward breakout, where the price breaks through a certain level. Once all these conditions are met, we can enter a short trade. For the stop loss, we set a point above the highest recent price level, providing protection in case the trade goes against us. And for the profit target, we aim for a gain of 1.8, the amount we're risking in the trade. We let the trade unfold and see if we can achieve our profit goal. Now, let's explore a few more examples of trades to help you better understand how this strategy works. I hope you found this video helpful and learned something valuable. Remember, learning is important when it comes to trading. Keep practicing and improving your skills. Alright, traders, if you want to keep up with my future strategies, make sure to subscribe. In my next video, I'll be sharing a strategy that works even better. And I'll see you in the next video. Stay awesome.